Alrighty. Sensational. We've already got about 40 people connected already. And sorry, we're running a couple of minutes behind. But we might get started straight away. We've got almost 90 people now.
Awesome.
Alrighty. Well, yeah, thanks everyone for your patience. I might get cracking with the webinar. Now, today's webinar, the focus of it is all about the JobKeeper. Now, you may have joined us on one of our previous webinars where we've been releasing basically an update every time the government releases a stimulus package to Australian citizens and business owners. So we've been deciphering those. But this webinar in particular, the purpose of it is to literally guide you step by step on how you can apply for the JobKeeper program. Now, we've actually got a couple of other presenters with me this morning as well. So we've got me, but also Rizal Ramzan, or Riz, as we call him, who's one of our most senior accountants at Inspire, and also Jamie. Jamie's just joined us last year at Inspire, and he came from one of the big four accounting firms. And Jamie's actually been doing a whole heap of research on this JobKeeper stuff and been keeping the rest of the team up to date. So he's been an awesome resource. So I've invited him to share his expertise on the webinar this morning, including a calculator he's built in Excel. And so we'll learn a little bit more about that as we go. And yeah, so I might get you to both say hi, guys.
Hey everyone, thanks for joining us today, and thanks for that very lovely introduction, Ben. And a really cool fact about Jamie as well, he's done quite a bit of the JobKeeper stuff to implement on his own little business as well. So it is definitely relevant that everyone that joins us today, and we need to understand how you guys experience this as well. It is quite a new thing that's been unleashed today, and yeah, we just want to make sure that we understand your point of view. So who better than Jamie, who's gonna run through some of our calculators today. Awesome, Jamie.
Hi guys, hello everyone.
Awesome. Thanks, Jamie. And just a heads up to everyone watching, we will be switching between different people's screens. So please bear with us. We're pretty used to sort of Zoom meetings and that sort of thing. But yeah, we'll be sharing from my screen to Jamie's to Riz's. Yeah, sorry, Riz, did you have something to mention there?
No. Just a thumbs up.
Awesome. No worries. Cool. Well, the other thing I'll mention as well is we've got our whole accounting team, in fact, everyone at Inspire, who's joining us as panelists on today's webinar. So keep in mind, if you've got a question that comes up throughout the webinar, please use the Q&A box. Don't use the chat box because we can't sort of track what's been answered and what hasn't. But you'll see a box there that says Q&A, and your question will go to all the panelists. And we also have a section towards the end of the webinar where we'll spend a lot of time going through the Q&A or the frequently asked questions about JobKeeper. So not necessarily the application frequently asked questions, but just general questions we'll save some time for at the end.
Yeah. Just want to give some shout outs there. From left to right, we've got Reggie, one of our accountants, been here quite a while as well, and Sakshi, who's also my close friend. Hi, Sakshi in the background. You got me, and then that's Gulshan right there, one of our junior accountants who's joined us and really rise through the ranks really fast recently. So yeah, super smart people. And Ali, our kind of quality assurance person in the business, he's very detailed. So good questions. Definitely, you want great detailed answers. Get that to Ali. And lastly, we've got Jamie there. And some people that are not on the screen, just want to shout out as well. Rose and Ange, they've been helping so much in this whole process as well. So thanks so much for getting the webinar running in record time. So thanks, guys. And yeah, looking forward to unfolding this today.
Wunderbar. And just a heads up as well, we've spent this morning looking at the ATO systems. They released them last night. Also, Xero have also released some functionality, and that's where sort of 99% of our clients do their payroll and their accounting. So Riz is actually going to show us step by step on how to register via or update details via Xero. So very cool. Alrighty. So before we get into how to apply, I just thought it'd be nice to do a bit of a recap on what the JobKeeper sort of program is all about. So I might cover these 4 points. Now, the purpose of JobKeeper is to help businesses who've suffered a bit of a loss in revenue or turnover they're using, kind of means the same thing, due to the COVID-19 sort of crisis that we're in. Now, in terms of eligibility, for most businesses, and that means under $1 billion in turnover, you need to have lost more than 30% or anticipated loss of more than 30% in revenue. But if you're a business, and this is relevant, like my wife worked for Green Cross, so their turnover is more than $1 billion. If you're more than $1 billion, then your revenue needs to decrease by more than 50% to be eligible for JobKeeper. And the second one there is the purpose of this is it's a payment from the ATO to the business to reimburse them for $1,500 per employee per fortnight. And that's only for eligible employees. So that's the purpose. It's a reimbursement of the wages there. And the last one there is payments start early May, and they're reimbursed monthly in arrears. Now that is a bit of a cash flow problem if you haven't got cash flow reserves. What I've heard is some of the banks have been offering overdrafts relatively easily to businesses who are eligible for JobKeeper, and the bank and the client is working really well together in terms of making sure that only wages are being paid out of that overdraft, and then when the reimbursement comes in straight from the ATO, it goes into that overdraft account. So if cash flow is a problem there, make sure you have a chat to the bank in the first instance to see what can happen.
Yeah, absolutely right, and thanks for that quick recap. With that recap as well, it's something new probably in the last few weeks that's just come up as well since we last spoke about the JobKeeper. So it is a bit of a thing to consider if cash is tight. It is a reimbursement. Very important to hear that. And one of the reasons why they did this is also to stop people from receiving the money and not actually paying the employees. It's just another stopgap from taking advantage of the system. You actually pay them first. You have to be out of pocket for them to reimburse you. So it's kind of like a Mexican standoff, and the ATO is taking the first shot, essentially.
That's it. Alrighty. And so what we've done in this webinar is we've broken down each of the steps. I think there's 5 steps in total that you need to do to sort of register and keep going with this JobKeeper program. And so we're going to break down one at a time. So the first one is the eligibility of the business itself. Now, we covered a few of these just before, but just to clarify, the first one there is had an ABN on the 12th of March 2020. So that's pretty straightforward. And then had eligible employees on the payroll at 1st of March 2020. So you I kind of think that you need an ABN before the 12th of March to have employees on the payroll. But anyway, that's another one there. Now, if you are self-employed, we've got that in a later step. So if you don't have anyone on the payroll, we have covered that, but it's coming up soon. And then the third one there is lost more than 30% of turnover if your turnover is under $1 billion, or more than 50% of your turnover if your turnover is more than $1 billion on a good day. So, yeah.
And some of those some points we did cover in our previous JobKeeper webinar. If you haven't checked that out, please request that from us as well. We'll be able to send a recording for that. But essentially, we're not going to go too much into detail from the eligibility part. Today, there's going to be quite a little bit more on the practical side of things, because there was a lot of things in the air when they announced this, and people were asking questions about practical things they need to do to make sure that they receive that payment and they can continue that business and keep the employees paid. So yeah, again, we're going to cover them off, but there will be more focus on more of the practical side of things today.
Awesome. That's great. Now, Riz, should we jump into Jamie's calculator now or do that a little bit later?
Yeah, I think that's a great idea, Ben. So the big contention point that everyone had was, how do I become eligible as a business. Now, as mentioned in in our previous webinar, there's two eligibilities. As a business, you need to be eligible, and your employees need to be eligible. The first part is pretty tough because, well, as you can see, the ABN is pretty easy. The being on the payroll is pretty easy to eligibility on that. What about my turnover? It's a lot of questions about that. And the ATO's come up with kind of 3 different measuring sticks in which you can measure your turnover and see if you're eligible or not. So Jamie's actually done an amazing job at doing up a calculator to make sure that when we plug in our numbers, we'll be able to see whether your business is eligible or not. So yeah, let's jump straight into the calculator, and I might hand it over to Jamie to run through his beautiful Excel calculator.
Awesome.
Yeah, awesome.
I've got control, have I?
You sure do.
Awesome. Okay, thank you for kind words, Riz. Okay, so this is the calculator here. So as you can see, it's already got numbers punched in, but if we change them, then we say we make 10,000. Obviously it decreases, increases as you put the numbers in.
Yeah.
So Jamie,
Was that Ben? Yeah.
Yeah. So Jamie, if you've got kind of 3 lines here, and
Yes.
a lot of the questions from clients and people wanting to know about the JobKeeper is when you say a decrease in 30% of turnover, when's that period for? And I think you've got some suggestions here. So do you want to just guide us through what the 3 options you've got here are?
Sure. So the first one is the June quarter 2019 compared to the upcoming June quarter 2020. So it's a forecasted one.
So this is when they say a anticipated drop of revenue, this is the one you can use for that?
That's correct, yeah.
Awesome.
So there's that one there. Then you move on to, there's another option here for March just gone versus March 2019. And that's your actual drop in revenue. So that's a more precise representation, I guess. And then you've got the third one, which is April 2019 to April 2020, which is another forecasted one.
So that's a month by month. Now, if you're a quarterly BAS payer or a monthly BAS payer, do you need to use one over the other, or is all 3 of these open to any business?
At the moment, the way it reads on the ATO's website, it's open to everyone.
Yeah.
Awesome. So I might be a quarterly payer, but I can choose to forecast my April 2020 compared to my April 2019.
Correct.
Awesome.
Yeah.
Okay. And so
just to jump in there, man, it is really interesting because what they've done is essentially open up the way we can measure our 30% downturn rather than using just one way of doing it. Something to highlight though, a lot of this is to do with comparing with past year results. As you can see, the first column is 2019, and then the second column, which is column B, it's all the current year comparing to last year, even though if it's forecasted. And those 3 measuring sticks are very clear. So I would go through those 3 steps first and see if you fall in this eligibility criteria. They're very clear. So if you are, cool, tick and flick, you're in. But if you're not, then we have to go through the alternative test. But we might go through that in a second.
Awesome. All right. Well, and Jamie, those alternative tests are quite interesting. But before we do that, can we just run a couple of live examples? So
Yeah,
let's say we want to compare our March that's just gone. So what we do is we'd open our Xero file up. We won't do this on the thing, but if we opened our Xero file up to a monthly profit and loss, if we run the March 2020, which is just finished, hopefully the bookkeeping's done, and we see what our revenue is for that one. And so let's say our revenue for the quarter is $300,000. So that's 100 grand a month. So if we put that in, 300 grand. Oh, sorry, this is the month. My bad. So we put 100,000 for the month of March, and then let's say last March was let's say $90,000. So we've grown between last year and this year. So what does your calculator say there? Cool. So so that is should that be around the other way?
It should. So that's an increase.
Oh, yes. Sorry. Okay. Yeah. So your red means you're ineligible.
Yes. Yeah.
Okay, so it's actually a good thing that it's showing red because the business has increased, but that's all good. And so the example you've got below that, so let's say our forecasted April turnover is, let's say it's $80,000. April 2020 is $80,000, but last April 19 was, let's say it was 150,000. What do we get there? So we've got a decrease of 47%, and so green means yes, we're eligible. So that's kind of how this calculator works. And what we might do is we'll share a link in the recording, and I might put one together that I can share in the chat box so people can get a copy of this. We will share the live spreadsheet here. So in Google Sheets, when you get this link, you just go to File. If you could just show this, Jamie. We'll file in the Google Sheets bit.
Just here.
On the bottom.
Oh, apologies.
Yeah, so if we go to File, we can go to Make a Copy, which is about the 5th one down. And then if you make your own copy of this and apply it to your business, then you can just make a copy of this spreadsheet. And so that's how we'll get it out to you. And just jumping back to the sheet itself, we've also seen a lot of questions to say, oh, well, I haven't had a turnover drop or an anticipated turnover drop because I'm a fast growth business. Like, let's say someone has been growing by 50% a year. If their turnover drops, it's probably going to be, maybe about the same as last year anyway, even though it's dropped compared to last month or the quarter previous, rather than the year beforehand. Now, if you're in that circumstance, or let's say you've purchased a business of a similar size, so you've almost doubled your revenue, then the commissioner has discretion to basically say that you're eligible anyway. And so there's supposed to be some alternative tests that are coming out, or I understand literally like an application that you can make to the commissioner, and that's where you can get some special consideration if you're not eligible for the turnover changes as they are like printed so clearly here. So anything more to say there, Jamie or Riz?
Yeah, I'd love to add a few things as well. This is getting a little bit technical, but essentially where we want to make sure that we don't get caught out is this is the measuring stick they're using for a revenue perspective is not all revenue, not all money coming in. There's a few things that are excluded. So if you, let's say, do things outside of the normal business operations, like you sold an asset, as sold a car and you receive the money in the business, that's not included in the turnover. So the term they use, again, a bit technical, is the GST turnover. Easiest way I can put it is that if you charge GST on it on a sale of a product or what you usually do as a business, that's your turnover. So when you look through your P&L, make sure you don't just take the total, really dissect that a little bit and look through it to make sure that you only pick up stuff that you sell with GST on it. Now that's really important. And now it doesn't mean that there has to be GST on it. It just means that that's the normal sale of the business. Normal operations of the business, the revenue that comes with it. Now the second thing that I want to add as well is everyone's kind of asking question. What if that's March, that's April projected? What happens in May? What happens in June? What happens in the future? How it works with this, with JobKeeper and eligibility, is that you're eligible. You test for eligibility once when you enroll, and then we're going to talk about how we're going to enroll today. But when you enroll, we test for eligibility. Now, from a month-to-month perspective, you're going to have to report your revenue or your turnover as an ongoing obligation if you were eligible at the first bit. Now, it doesn't mean that you get retested every time. That's not necessarily what it means. They want to keep track to see how your business is going. My guess is they want to see all these businesses that have applied, and they want to see what their revenue is going to see whether the JobKeeper still needs to be there, or do they then pull it off and turn it down, because they do say it's up to 6 months, up to September, but they have the choice to actually turn that down if they want to. So yeah, again, it's not an eligibility issue from month to month. It's the first time, but you report it ongoing. Now, that doesn't mean that you will be receiving automatically ongoing as well. It just depends what happens, and if the ATO decides to pull the plug on that, or the federal government decides, oh, cool, everyone's kind of coming back to normal, we'll pull the plug on the JobKeeper payment. So yeah, that's how it looks like. Again, eligibility upfront and then month-to-month reporting.
And just on that, Riz, one of our clients, Ryan, has asked, if my business drops by 30% in April, but not in May or June, will our business be eligible from May onwards, or just the months where the business drops by 30%?
Great question. From our understanding right now, eligibility, again, is tested upfront, Ryan. Great question. And then you just have to report it monthly. Now, whether or not you drop off being eligible or not is remains to be seen right now. The way it's being read is you get tested upfront and only report it monthly. So my assumption is yes, unless otherwise advised. So I would assume you just keep making those payments ongoing.
Awesome. That's great. Alrighty. Now, for anyone who wants to get their hands on this calculator, I'm just about to post the link into the chat box, which I've just done now. So if you copy and paste that into your browser, you'll be able to see this spreadsheet that Jamie's got up on his screen. And again, just remember to go to File, create a copy, and then you can apply it to your own business. I can see so many people jumping in already.
There's quite a few.
What we might do is see if we can lock this as well, so that people don't. Just don't change anything just yet.
It already is, Riz. Everyone can only just view. Also, Riz, just while you're talking about turnover as well, we've had Peter ask, asking. We've got customers in Australia, but we have export to international customers too. Now, can you just give us some guidance on the GST turnover with export sales?
Yeah, really interesting is that the way they're measuring this again is the GST turnover. If you're exporting your product or your service, your sales, it's likely that you're not charging GST on that. Now, that is excluded from the GST turnover definition. So essentially, you can take that out and not put it in the numbers here to measure whether you're eligible or not. So yeah, exports are not included.
Okay. Awesome. And just to sort of clarify, another question from Cam. So it's just the sales that you charge GST on?
Yes, that's right. Exactly. But then, let's take that a step back as well. If it's, let's say, a sale of a commercial property and you had to charge GST on that, that's not the normal business operations. If you're a florist or if you're so you have to take that into consideration as well. It doesn't mean if it's tagged with GST, you include it. Look at your normal operations, and whatever that comes in that month is what you use. Take out the anomalies. That's what I would do.
Awesome. And another question we've had is the turnover on a cash basis or an accrual basis? That's an interesting one.
Question. So the way that they're doing, a lot of this turnover is actually reported in your BASs. So if you have a cash basis reporting, you're reporting the BAS on a cash basis, I would use the cash basis method, because that's where the numbers that they will use to cross-check as well. Now, that doesn't mean that you can't use the accruals basis as well. But it's just a matter of picking one, which one's probably better for you to explain it. But yeah, I foresee that they're going to cross-check a lot of these numbers with BASs that we lodge as well.
Yeah, cool. And Riz, interesting one that's come through. So when we talk about GST turnover, let's say we're in an industry like we're a fruit shop, or where you sell sort of food that hasn't been modified or done in any way, but also in certain health industries like physiotherapists or GPs, medical. There's a couple of industries where mostly the sales are GST free. How do we go about that? Is it just specifically export sales that aren't included?
Absolutely right. So the GST is what they're using as a definition, but whether or not you're registered for GST is a different question. Whether or not you are you have to charge GST on those sales is a different question. So GST turnover is a test itself. So using that again, it gets technical and it's a bit confusing. Like, let's take that and put it aside. It's basically the normal turnover of your business. The way they've used GST turnover is to make sure that there's something in the legislation that exists that they can use back on. So yeah, I wouldn't go and start digging around whether or not you should register for GST now to be eligible for JobKeeper and stuff like that. That's totally irrelevant.
Awesome. We've got lots of questions about that, about the GST turnover. So So we might actually keep going because I think we've answered a few of these as well. Rebecca, we've got yours. So yeah, if you think we're ready to move on, Riz, we might do that.
Yeah, absolutely. And just to kind of cover off in that, let's take a step back. Let's take three or four steps back before we get into the technical side of things. The way this is being done again is on a self-assessment base. We'll show you how to essentially enroll for the JobKeeper payment in a bit. Where we need to make sure is there's a good standing and again in good faith that we actually experience that downturn. Where I think we start falling outside the scope is if we start trying to get the JobKeeper payments. Obviously, there's not a lot of people doing that, but if we're worried with technicalities, just look at the basis of it. If your normal business has a 30% downturn and it's based on normal income that you receive, and you compare it in 3 different measuring sticks that we mentioned here, it is very likely you're going to be eligible. I think that's the most important thing, and we just self-assess at that moment.
Awesome. Alrighty, and guys, I'm seeing a couple of Q&As of questions that we're going to be answering later. So maybe if we can just keep the Q&As to specifically what we're talking about at the time, and then we can, and I'm sure we'll cover a lot of them actually as we go too. All right. Well, thank you, Jamie, for running us through that calculator. I can see still about 50 people that's in there. So make sure you grab a copy of that and apply it to your business.
Yeah, I hope that helps a lot of people with that calculator, just at least to have a little bit of a basis to work off, because that's the biggest thing is there's so much uncertainty right now. I hope that does help a lot of people. Thanks, Jamie.
Awesome.
Thanks, good.
All right. Well, so that's step 1, looking at the eligibility from a business perspective. Now we want to have a look at eligibility from an employee perspective. Now we have covered this on the previous webinars, but again, we just want to make sure it's sort of refreshed in people's minds what we're looking for here. And in terms of the employee side, they need to be 16 years or older. And so, we've had a couple of questions saying, my son or daughter who does some work from a marketing perspective, or, who works at, call it Macca's or that sort of thing, are they eligible? Unless they're 16 years old or more, unfortunately, they're not. They also need to be an Australian citizen, permanent resident, or certain visas. So it doesn't actually include student visas or 457, the working visas. So we just need to be careful there. But it does include subclass 444 visas, which is New Zealand nationals who are in Australia working, is my understanding of that. Now, it does include permanent full-time or part-time employees or casuals, so long as they've been with the business for more than 12 months. And it also includes people on leave, such as unpaid maternity leave. Now that's quite cool. So you might have had someone like an employee, or even yourself or your spouse, who went on maternity leave a couple of months ago, and they had the paid parental leave, and now they're on unpaid leave. This JobKeeper legislation is written so that it actually includes people on unpaid maternity leave, so long as they're still in touch with their employer, is my understanding. So they're still kind of on the payroll, even though they're not getting paid. So unpaid maternity leave. It also includes employees who have been stood down. And the government was very clear on this one as well. If you've terminated someone, and let's say they've already applied for JobSeeker and they're receiving JobSeeker payment, so that's different to JobKeeper, then you can rehire that team member and put them on the JobKeeper program. And now they've got their own requirements to make sure Centrelink knows that they're not eligible for JobSeeker anymore. But you can take someone you've terminated in the past, over the past sort of month or so, rehire them and pay them this JobKeeper benefit, which is pretty cool. Alrighty. Now, in terms of things to do, you will need to rehire or re-engage those let down or stood down. Now, with people standing down, Riz, you might be able to confirm for me here. Now, you don't need to actually rehire them or get them to do any work. They can still be stood down, but just receive this $1,500 per fortnight. Is that correct?
Yeah, I mean, it's 2 parts of the question there. From eligibility criteria, so long as they're connected to the business, that's where the rehire bit is, that you put them back on the payroll and they are an employee of your business. They're just not working any hours. Now, whether or not they have to work hours or whether or not you want to put them on hours, whether you can even stand down someone. That's a workplace arrangement thing. And you want to get advice around the HR side of things, someone who's an HR expert to make sure that you're not tripping any wires there. But from an eligibility perspective, as long as they're on your payroll and they were, with you, before the 1st of March, and you had to let them go, you want to put them back on. That's essentially what it means by rehire or re-engage here. And for those who are stood down's not firing them. It's just saying, look, you don't have any hours. I can't pay you, but I'd love for you to still work for me for us when we open our doors again. So they're just staying at home and probably on job seeker. And now you can actually tell them, look, I can actually nominate you on the JobKeeper payment. So whether or not you still want to stand them down because of hours, same thing applies. It's up to your business, and also according to your workplace arrangement with that employee. Doesn't necessarily mean they have to come in. It just depends.
Awesome. Thank you for running through that. Now, Riz, the next one there is using Xero as a shortcut. Now, we've seen some really cool features there. Are we going to hold off on showing that just now and do that in one of the later steps?
No, actually, we might use it now, Ben, just because it's a bit of a shortcut. And the reason why we're great ambassadors of Xero, but if you have any other payroll software that you use as well, there will be some sort of a system in place for you to report to the ATO. Now, but we're going to particularly look through Xero right now because they've been really on the front foot on updating us on what's happening, and they've actually launched some stuff. So if you are on Xero, this is going to be really relevant to you. If not, have a look through. Go online and search your relevant payroll software, KeyPay, MyOb, and just look through. They will have some sort of system in place if they're big payroll providers. Now, for today, I'm going to share you the Xero dashboard. Now, Ben put there as a shortcut or a hack. Now, remembering what we're doing right now, okay? Step one, we were doing checking the eligibility of our business. Did we meet our turnover test? Tick, yes. Now we need to look at the eligibility of our employees because not everyone receives it. So we need to check who fits in that criteria. Now, using Xero is actually quite a great hack because they have a system in place for that. Now, I do have to stress, it is still your obligation as an employer to confirm this. Xero doesn't tell you this and you just kind of listen. Oh, Xero told me. We have to confirm as well. So just check that your details are correct. Xero is only reporting what you've put in their employee cards. So the easiest way to check which employees are eligible or not is to go into payroll, and you can actually go into, sorry, this is a demo file, by the way. So if you go into payroll, you're going to pay employees. There's a support page here that they've kind of launched, and there's a few things. This is really cool. And this is why I love Xero. They keep everything really neat, and there's a step-by-step process as well. And also what they're still working on. Really cool stuff. So have a look through when you have some time. But the one I want to go through today is to enroll your employees for JobKeeper payments. Okay. This is the part, again, we're still in step two, just identifying. We're not enrolling, we're not doing anything. We're not actually enrolling anyone right now. We're just identifying which employees are eligible. What they do is actually they list out potential eligible employees. Now, instead of you sitting down and going, oh, where did Bob start? Was it last year or this year? When did Jane start? Was it, oh, is Jane a resident? Oh, I can't remember. What they do here is exactly those 4 criteria. So whether they're in full-time, part-time, or casual employment, when they started, what their age is, they have to be above 16, and whether they're a resident, a temporary resident, or even if they're a foreign resident or anything like that. So,
oh my goodness, this is awesome, Riz.
So from that perspective, it's such a hack. You don't have to sit down and think about, Bob and Jane or Karen, when did they start? We just look through this. Again, I would check through and confirm and see, are those right? Because again, it's all based on what you put in their employee files in Xero. So check through it and they go potential. Cool. If they're potentially eligible, you can then throw their name in the hat to nominate them. That will be the next step. But this will be a great starting point to make sure that we have the right employees on there. Yeah, little great hack. Now, if you don't have Xero, again, check in with your payroll provider. But if you don't yet use some sort of online accounting software, go through your records. Just have a list. This is what we're doing. Step 1, eligibility for business. Step 2, identifying who are my employee who are eligible. This again, I'm gonna take anything to do with self-employed people and put it in a different bucket for now. Only employees. Just look at your employees. If you have questions about self-employed people, we're going to run through that in a second as well. It's a little bit more complex. But just look at employees, build that list. So it's very clear now. I have, in my mind, I'm eligible because I have a calculator telling me I'm eligible. And then I have a list which tells me who are my employees. The next step is then, okay, what do I do with myself as a self-employed person? We can run through that as well.
Awesome. And so, Riz, let's say, does this demo file have anyone who's not eligible, or is everyone eligible?
Unfortunately, this one, I didn't get to set up a fake employee just yet.
Yeah, that's okay.
But it will actually show a different line at the bottom here saying possibly not eligible. It will be in red. And it will tell you the people who are not, are not above 16, who are not, who didn't start before the first, all this stuff. They will tell you. Again, check the numbers, check, make sure the information is correct. But that's how great Xero can be. It's a good starting point. And awesome. More often than not, it's accurate because your record for your employees will be accurate as well. And we can go ahead and register them.
Wonderful.
An important point, Ben, if we can share the slide again.
Yeah, is this the notice?
Yeah.
Awesome. So once you've worked out who's eligible, the next step is to get them to fill out basically a nomination notice. So there's a step for you as the employer to fill out, which is literally just the employer name and the ABN. And then the employee needs to complete section B, which is their name, not too difficult, the date of birth, address, phone and email. Now they need to go through these tick boxes to make sure you're currently employed, including those stood down or rehired. You're eligible. You were employed by the employer at 1st of March. Basically, those sort of eligibility conditions that we went through. And if they say yes, I agree to be nominated, which is great, or they say no, I'm not. Now, if you've got employees who work for multiple businesses, you and someone else, then they may say no, as an example. But you do need to get everyone to fill this out. And now our understanding is that you just need this nomination back from the employee, but you don't need to send it anywhere. So as long as you've got it on file, that's all you need to do. Now, I will post the link in the chat box right now for this as well. Chat box coming through, bang. So that's where you get the PDF nomination form to get back from your employees.
Yeah, awesome. And again, see, we're not paying anyone yet. We're not doing anything. We're just getting our ducks in a row before we can start making those payments. So eligibility for business, eligibility for employees, and I have a checklist or a list of employees that are eligible, and I've sent them all these notices. And you want to make sure you get them back as well before you do anything else. The confirmation that you are the primary employer is super important because you will be in, they will be in hot water if they're claiming 2 different JobKeeper payments. You want to get that on record. It's your protection and also for them to confirm so there's no confusion. So definitely get it all back and have that sitting somewhere in your office, or scan that and save that in a safe place. What Ben's kind of listed there as well is nominate how many employees via business model. So how we can do this nomination is through the enrollment process as well. And the ongoing reporting, like I mentioned before. We're going to run through how to enroll in a second. But in Xero, as I've shared before, sorry, Ben, I'm just going to steal that screen for a second.
Yep, no worries.
As I shared before, this is where you can actually start enrolling each one of them. Again, I'm not clicking any of the start JobKeeper payments yet. I'm just getting all the information. Once we enroll it, I'll show you how to actually start clicking each one of these.
Alrighty. Now, the next step there is nominate how many employees via the business portal. Is this where Jamie's going to show us through this one?
Yeah. So where if you're a business owner and you have MyGov ID set up, If you don't, go set it up. You can also register for a business portal. A business portal is basically this portal where you can access ATO online services, such as enrolling your business for JobKeeper payments and nominating which employees are eligible. Now, Jamie, and was it Jamie's brother-in-law or brother?
My brother, yes, my brother.
Brother has kindly let us use his business portal to show you how it looks like, so that everyone can understand how to do it. And yeah, that's exactly it. Then that's the next step.
Okay,
Awesome.
so I'm on, am I? Yep. Okay,
Yeah.
so when you log into your MyGov services, you'll have something similar to, oh, yeah, sorry,
Gary,
Ben.
we just can't see your screen. So if you
Oh, okay, give me a second.
share button, thank you.
Okay.
Right, we've got that there.
So when you log into your MyGov ID, you'll have something similar to this. You'll have all these kind of things here. What we want to click on is the Australian Taxation Office. It'll take you to their website, and then you click right here where it says View. And step one is to enroll yourself right here. So you'd click Enroll. It would load up, and you'd choose a period when you're expecting or have already experienced a drop in revenue. Say yes. If you're a sole trader, you won't have any employees, so you go 0. And
but
then
if you do have employees, that's where you put them in?
That's correct, yeah. So this page is identical through the business portal for other entities. The only difference being, are you enrolling as a sole trader? Down here is what you tick
so,
yes.
And obviously, if you're running through a trust or a company, you tick no to that. But sole trader is literally an ABN in your own name. You're registered as an individual business.
That's correct. Yeah.
Awesome.
So, interesting enough, we're still talking about employees here. So there's nothing about the business owner and nothing about the business participant just yet. Now, Jamie, if you could scroll up just a tiny bit. If we look at those two boxes that says employees, it says fortnight 1 and fortnight 2. This is how the enrollment is going to work, is whether it's going to be testing on how many fortnights you're going to be enrolling for. So number of employees that will be remunerated $1,500 per fortnight from 30th to the 12th of April. How many employees? So the reason for that is it might change from fortnight to fortnight if they're no longer with you. So what I foresee in your monthly reporting is making sure that all your employees, you're updating the ATO that, yes, I still have 5 employees. Yes, I still have 5 employees. I still need $1,500 per fortnight for 5 employees. If someone you had to let go, obviously you have to update that from a monthly perspective. The other thing as well is in this section at the bottom, it says, are you enrolling as a sole trader? If you're a business owner who runs a company, a trust, or a partnership, you're eligible. If your business is eligible and stuff like that, you can also enroll yourself. This is where there will be a difference. It will be a section that says, are you enrolling as a business participant? That's the term they're using, business participant. And I might run through what the eligibility criteria for that looks like, because this is slightly different from just employees.
Just quickly, Riz, before you move on, I just want to point out that if you are an employee who's part-time or full-time you have an employer, you can't actually apply for the sole trader JobKeeper.
Yeah.
Okay. So if you're both a sole trader and you work for someone else as an employee, not a contractor, is that what you're referring to there?
That's correct. Yeah, just this one right here.
Sorry, it applies the same as a business participant as well. So a sole trader, so just to clarify what this all means, is a sole trader is someone who has an ABN in their personal name, no structure, no companies, trust or partnership. This is the way it's done, and you can't be employed and claim it there and also claim it as a sole trader. Now, if you're a business participant, whether you have a partnership, trust, or a company, it's the same rule. You can't be employed and claim it in another job that you have, and also claim it as a business participant as well. And I'll run through that a little bit more in a second to make that clearer.
Awesome. Alrighty. And Riz, we've just got one more thing in step 2, which is talking about employees. The last one that I've got on the slide is pay your nominated employees and report through single touch payroll.
Yeah, so I might explain that step. Actually, yeah, that's actually a good segue. So what we do right now, I'm really recapping it because it's so confusing. You've looked at your eligibility for the business, tick, you have your eligibility for all your employees and a list, and you've nominated them in this form, and you click submit. And also I've got all the notifications from my employees. Don't forget that, that's an important bit. So I have all this stuff. Now I've clicked submit. Now what I need to do is to make sure that I pay them $1,500 per fortnight. That is very important. If we want to go back to the slides, we can run through a little bit more about that. But essentially what it means is, like I said at the start, it's a reimbursement scheme. It's not just pay you and you pay your employees. So it is very important that you pay your employees the $1,500 per fortnight, the ones that you've nominated. Now, some key things that I do want to mention about this bit, okay? We are going into the second fortnight of the JobKeeper payment from 30th to the 12th. And then now from the 13th to the 26th, we're in that fortnight, that second batch. The ATO has said, if you haven't paid them for the last 2 fortnights, the one we're in, the one before, they said you can make a back pay essentially of $1,500 back to your employees for the last 2 fortnights. And you have to make sure you pay them before the end of April. So they're giving a bit of leniency. That's very important because if every one of you, and a lot of people have kind of waited and kind of want to see what's coming up in the next few weeks to get confirmation first. If you've gone through the process and go, oh man, I'm actually eligible, my employees are eligible, I haven't paid them, we need to back pay them $1,500 per fortnight for those 2 fortnights. Now, they're giving out at the end of April. Going forward, it's very strict. It has to be at the end of the fortnight. So again, you have to pay them first. Now, at the end of the 2 fortnights, on the 1st of May or early May, they're going to reimburse you for those 2 fortnights. And then going forward, you're going to pay every fortnight again. And then at the end of the month, they'll reimburse you for the fortnights in that month. So that's very, very important to do. Now, how your Xero file or your MyOut file is set up right now, we have to make sure that it's set up in a way that you can start processing those payments, those back payments. And there is a way to do that as well. And I highly recommend getting in touch with your accountants, or you can get in touch with us if you need some help in that sense, because there is a way to set up your payroll. The question about, oh, what if I have to top up? What about the super? What pay items do I use? And it's a bit granular. We're not going to run through today, but yeah, get in touch with them. There's definitely a way to back pay them.
Awesome. Alrighty. Now, are we ready to move on to step number 3, Riz?
Yes, let's do this.
Now, we touched on this before, but it's talking about, this is if you want to claim it as a self-employed person. So we would call it self-employed, but the ATO have called it a business participant claim. That's right, yeah?
That's exactly that.
Yeah, to add to the confusion. Cool. So Riz, did you want to sort of guide us through the eligibility? Because it's different to if you're an employee. So if you can just guide us through, how are you eligible or not?
Yeah, so, all right. Our employees are taken care of now, all right? Now, something that before, in that form that we saw, the enrollment form, you can see, like I said, if you're a sole trader or you're a self-employed person, you're under this business participant section. The bottom half of that enrollment form says, are you going to enroll yourself, or who are you going to nominate as that person who's a business participant? So you actually nominate your employees and the business participant at the same time and submit that to the ATO. Now, to be eligible, it's slightly different. And there's a few things that are similar where you have to be Australian resident and you're on a triple visa. There's no temporary visas. You're not working. You're not receiving parental leave or dad and partner pay. That's super important. Some people have reached out to me saying, hey, I'm on maternity leave. I'm receiving this. Can I also get the JobKeeper as a business owner? I can't, unfortunately. Now, you're not receiving workers' compensation as well. Now, and as you go down, you can see that as a business participant, you can be a sole trader, which is yourself. If you run a business through a company, one director or shareholder is eligible to be nominated. If you run it through a trust, one of your beneficiaries. Now have a look at your trust deeds to make sure that they are either listed beneficiaries or they're not listed, but they're showing as secondary or tertiary beneficiaries in your trust deed. If you're unsure, again, talk to your accountant. They'll know that stuff. And if you're a partnership, obviously just one of the partners and not both. And unfortunately, where it does disadvantage people who are in, like say, an accounting firm with 5 different partners, only one partner will be eligible. In that case, you have to be kind of, you have to kind of pick your favorite pony in that sense, because what's going to happen is that person is going to receive that payment for the whole duration of the JobKeeper scheme. It's not going to change. It's going to be that person. And the other distinction I want to make as well is you're only nominating a business participant, but you're not kind of nominating the person itself. The business will receive the money. One business receives the JobKeeper payment for that business participant. So there's no similar requirement as before where, you know, you just lost Ben there, unfortunately. He might join in a second. But yeah, essentially where if you are a self-employed person, the business gets paid for that JobKeeper payment. Now, there's no requirement, unlike the employees, where you have to make the payment for reimbursement. It's very different. And the other point to remember as well is you're not an employee. This is a very important distinction. So if you were an employee of the business, you have to think of different hats you wear. I'm an employee, I have a hat, and I'm a business owner, I have a different hat. If I'm an employee, I'm on the payroll before the 1st of March. I receive, you know, salary and actually get paid as per a normal employee. You want to submit yourself as an eligible employee as well. Not part of that enrollment form. Whereas if you're not an employee and you're not on the books, you're not in there at all, you can submit it on the bottom half as a business participant. So yeah, very, very important distinction there. Again, talk to your accountants. They'll be able to help you distinct yourself because how you get paid from business really depends how you're structured there as well. Yeah, I hope that's good. Ben, good to have you back.
Thank you. My laptop just crapped itself for a sec, but I'm all back now.
That's all good. Yeah, so we just ran through all the business participant side of things. I might pause here for a bit of a Q&A because I know this is the big part everyone has questions about. And just want to see if there's anything that I can answer live as well. Now, let me just have a quick look. There's a few things in here. Let me see. Yeah, is the form now available to complete on, thanks Helen, is the form now available to complete on ATO for a business participant? Yes, it's on the second half of that form. Jamie, if you want to share your screen again, we can look through that little portal section that you shared. It is available, it's on that second half. It's just that Jamie's version will say sole trader, but your version will say business participant. So Jamie, if you want to just highlight that section and on the bottom section there. Are you enrolling as, yes, so that's the business participation section. Let me see. So we pay staff out of savings. So we transfer figure to cover the wages every fortnight. I see what you're saying there. So yeah, depending on your structures, if you're a group, let's say, of entities with different structures, we have to understand that if you're a group, I believe they test, there is a testing on to see how the group works. But if you have employees in a separate entity and you pay service fees to that entity to cover the wages, that's the entity that will essentially look at the turnover, because it's a business that runs kind of like a labor hire firm. That's its business on its own. Again, a bit more specific there, and I would, grab your accountant and just sit down and work that out a little bit closer to the ground. And from a business owner perspective, it would be the entity that makes the most amount of revenue for the business that I would look at, rather than a separate one. Let's see, any more Q&As? Oh, there's quite a few here. So doing this, press search, so the money from myself goes into the business account. Yes, great question, Amanda. So Amanda's a sole trader and she takes drawings out of the business, not on a payroll. So the money for myself goes into the business account. That's right. And you don't have to pay yourself the 1,500 per fortnight. Is that correct? Yes, our reading right now, because you're not an employee, you don't have to kind of pay yourself that money. The difference is if you are an employee, really important distinction. If you are an employee of that business, you have to pay that $1,500. In your case, Amanda, it doesn't sound like you are on the books. You haven't paid yourself. You don't need to keep doing that. Let's see. Yeah.
So Riz, just while you're looking at that, I've just pulled up a JobKeeper registration form as a trust, and you can, not as a sole trader, and you can see it says eligible business participant. So just echoing what Riz said there, if you're not on your business's payroll, so you cannot be on your trust's or company's payroll to tick the yes box here. So if you're receiving drawings, distributions, dividends, that sort of thing, that's where you would claim here. Are you intending to enroll as the business participant, not as an employee? If you are an employee, you'd add yourself to this box up here. Correct, Riz?
Exactly right. And it could be yourself as well. So remember that. That's what I'm trying to get across very clearly. It could be that you are an employee and you put yourself at the top rather than the bottom. Cam Sutherland has a really good question. So if you are a director and then employee and have a business partner, you should claim one director as a business participant and other as an employee. And you can essentially do that. So if they are an employee of the business, but you can only claim one business participant and one as an employee. So those are two different things, very separate boxes there.
Yeah. And important there is to make sure that you can't go and kind of retrospectively add someone to the payroll. We can't be seen to be doing naughty things here. And so if we remember the eligibility to be an employee, you need to be registered on the payroll. I think it says as at the 12th of March. You need to be on the payroll. So if you're not on your payroll, don't go and put yourself on now because it's just not going to look good. You need to already have been on the payroll back then.
Yeah, I dare say there's going to be some stuff in place to make sure that we're, in good faith applying the self-assessment and eligibility as best as possible. It is a lot of money that the government's kind of putting through, so I would be wary of doing that. And 90% of people are not. So I think we're everyone's more cautious than anything. If not, everyone would have just started grabbing payments as well. Ida, you have a good question as well. This is more to do with the payment amount. If we're paying them more than $1,500, let's say someone who's an employee, you pay them $3,000 per fortnight. Yes, that $1,500 is just to subsidize that payment. It's not to add on top or anything like that. Absolutely right. Let me see. And we might keep moving, Ben. And we might answer some of these questions. There's some good questions here, guys. Keep them coming through. We're going to spend some time after this to answer some of the Q&A, either live or in the chat boxes. Sorry, in the Q&A section itself, as the accountants work through some of these questions.
Awesome. And Riz, the next step we're going to talk about is actually applying as a self-employed, but we've already actually talked about this and shown examples. So step 4 is applying as a self-employed or business participant. And we just showed you the forms that you need to look at. So if you're a sole trader, it's through MyGov, or you can access it via the business portal. And we might actually post a link. Jamie, if you could just post a link to the business portal, please. If people want to do that in the chat box. Now, if you're an other structure, now what I mean by other structure is you're not a sole trader. So you're a company, trust, a partner in a partnership. That's about it. If you're not on your own payroll at the 1st of March, then register also via the business portal. And that's where you tick the, are you intending to enroll in as a business participant? That's the yes. But if you're on your own payroll at the 1st of March, you're covered under step 2, which is applying as an employee. So we did just cover that in those live examples we gave in the JobKeeper application form, but just to sort of reconfirm that, which is actually all of step 4.
That's absolutely right. Yeah, and I guess the thing that we want to make sure that everyone has access to is, yes, you might have accountants and you might have tax agents or BAS agents that can work on your behalf to help you enroll with this stuff. And they can do it through their tax agent portal, and they would have access to all that stuff. Now, we want to make sure that if you don't have that, you can do it yourself via the business portal and go through the steps we mentioned as well, so that you're eligible. But yeah, absolutely right. Thanks, Ben.
Awesome. So if we move on to step 5, the step 5 is actually all about ongoing reporting. So step 1 to 4 is talking about eligibility and the application of it, making sure you're making those payments. And then number 5 is the ongoing reporting. In terms of what we know at the moment, we know it's going to be reporting on your business's monthly turnover, but the ATO have said they're going to release details on the 4th of May 2020. So that's a few weeks away in terms of the ongoing monthly reporting, which is a little while away. But what we expect is you need to somehow report your monthly turnover, GST turnover, that sort of thing, and who knows what form it's going to be in. What I think they're going for is the simplest outcome. It could be something as simple as lodging your BAS, but it could also mean some sort of monthly form that we need to do. You also need to let the ATO know if eligible employees change, so if they become ineligible or they leave employment. So you need to notify that to the ATO so that they know that they're no longer eligible. Report current and projected GST turnover. So they're the kind of ongoing reporting requirements that we need to do. And again, the exact method is to be released on that. But yeah.
Well, I'd love to share as well, just a glimpse of what the future might look like for us from a reporting perspective. I'm just going to steal the screen again.
Yep. So let me just stop that.
Thank you.
All right.
Let me see here. Cool. So essentially what we want to look at is this payroll section in Xero. So a lot, again, we're using Xero and talking about Xero all the time, but there will be some sort of section for your payroll provider. This section is the enrollment bit. Now, there was a question by Ray. Great question, Ray. Ray's done all the steps. He's well ahead of all of us, and actually filled in everything on the ATO portal. He's got ID. He's done everything. Awesome stuff. Now, the question is then, what do I do next? As long you need to also register in Xero or your payroll provider, and make sure that you set up this. This is what I mean. Set up the payroll system so that you can report ongoing. This is merely what's happening here. Now, remember at the start I said I won't click on any of this stuff yet because it's not the steps yet. This is after the fact. So now that we're enrolled with the ATO, we then can start selecting our employees. So let's say James LeBron here, we want to start paying him the fortnightly JobKeeper payment. We can then select which fortnight we want to start paying and then save reporting. So this is about which fortnight they became eligible. Now that's key. It's not about when we want to pay them or when do we just start paying them. If they're not, they might not be eligible in this section, but eligible later. For instance, they're above 16 or they're permanent resident or something's changed in that sense, then you want to select that. So let's say he was eligible at 30th and all you do is click save for reporting. That's all that happens. Now, beyond that point, all you do is you make sure you run your payroll and then file your payroll to STP. Now that's an important step, very, very important step, because if you're not registered for STP, you want to register first, assuming a lot of people would have been, but this is a very simple step in which you are, Xero can help as well. But essentially what you want to do is then enroll them and then set up your Xero so that when you pay your employees, I don't think this is set up by the way, it will show a JobKeeper top-up payment section, and the way to do that is to go into this little help section in Xero as well. This little help section, update your JobKeeper pay items to report correctly to Xero. So Ray, answering your question, what do I need to do next? Make sure you set up your Xero file so you can do this. And this is the steps. And then the next step after you set it up is just file it every time. File it to the ATO every time you do that. My understanding and what I'm guessing is they want to make sure that when you say, hey, I have 3 employees, give me $1,500 each for them that I've nominated, they're going to look through the STP filing and just make sure that you paid them. That's the key. They want to see that you paid them. And Xero and your payroll software will be able to do that. Question, if you don't have a payroll software, you can actually call them up and they'll be able to assist you with some next steps. Or if you don't like using Xero, or if you don't like having an online version or a cloud version, you're a fairly small employer and you don't want to pay all that money for that, you can call them up and essentially they'll be able to assist you. But a lot of that stuff is not out yet. Like Ben said, it's on the 4th of May when we start reporting. Or the form comes out on how we can start reporting as well. Ben, I think that's
fantastic. Well, what we've got remaining is we've actually put together a couple of ways that we can help business owners who need a bit more help than the sort of DIY version, or just looking for that little bit extra. So I want to run through some options for assistance there. Plus, we do want to dig into the Q&A box. I can see at least 35 questions that we've got that we haven't yet answered. So we do want to get to that. So I'll do it in that order. Firstly, sharing the ways we can help, Inspire can help you with this stuff, and then the Q&A. So in terms of further help that we can give you, we are putting together a JobKeeper assistance sort of product where we actually help and literally walk you through the registration for JobKeeper and also work with you to make sure your employees are eligible. But we do the Xero administration for you. And in terms of the details of this and the pricing, we're actually going to send it with the recording. So that's with the JobKeeper assistance. We can do this with clients. It'll be at a reduced price for clients, or if you're not yet a client, there will be some options for you as well. Now, the other thing that we've been putting together is actually a combined service for business owners. So what we've been finding is we work with a couple of other businesses that work with clients nationally. One of them is Natasha at Employee Matters, and the other one is Danny at Danny King Legal. They're both based in New South Wales, but work with clients around Australia. And obviously we're based in Brisbane, but also do the same as well, work nationally. Now, we've had a lot of questions where, let's say, we can definitely help with the cash flow aspects and some of the payroll aspects, but we can't answer some questions around the legalities of firing people or standing them down, or what you can get them to do and not. So that's where we've partnered with a legal firm, but also a HR consulting firm. And we've put together a business relief package. And let me share the actual thing. So if anyone's interested in this sort of thing, where you literally get financial help, legal help, and HR consulting help, this is where you can express your interest, and you'll just chuck in your name, phone number, and email address, and someone will give you a call. It's a fixed price of $1,500, and you get a consultation with each of us. So it's actually pretty good value, and $1,500 is one fortnightly payment for just one employee. In terms of what you get for that, so Inspire will help you maximize your cash receipts from the stimulus package measures, and multiple, and we'll also talk about what you might be eligible and not eligible for. We'll also prepare a cash flow forecast for 12 months. So you walk away with a forecast or a budget from us. And we also look at how the ATO might be able to give you some tax relief and ease some cash flow pressure there. From a legal perspective, you'll get your legal options brainstormed, which is great. Identify the best solution for your business and its employees, and formulate a plan to implement it as well. Now, from a HR perspective, Employee Matters are going to give you some template letters, scripts, and processes to meet your needs. Also give you a communications plan for your team, which is really important. So how you actually roll out these strategies in your business, and help you maintain productivity, motivation, and engagement. So it's pretty cool. So it is $1,500 plus GST. How you actually take the next step on this is we've set up a website called businessreliefpackage.com. Express your interest, and then someone will be in touch from there. So that's live literally as of this morning. People are able to do that, and there's no obligation to use any of us ongoing. We can just provide that once-off service to you. to help you out of this rut. But yeah, you get that accounting, legal, and HR perspective, which is what quite a few people have been reaching out for, which is cool. Now, there's another option as well. If you're needing assistance from us, which is an emergency assistance meeting, we have launched this actually a couple of weeks ago already, and we've done this with quite a few clients now. Which is we basically do similar things to we create you a 12-month budget, cash flow forecast. We look at what stimulus measures you're eligible for. We even work with the ATO, and so we'll give the ATO a call. Vary your instalments if you need to, extend your payment plans, put payments on pause, things like that. Make sure your cash flow's sorted and you've got clarity for the next few months. So that's an option for you. Now, if you are a client, you only pay 500 plus GST for that. But if you're not, then it's 750 plus GST. And if you'd like to book that, then it's book one of those, and then you can do so straight into our calendars at that link down there. So INSPRED/EAM or emergency assistance meeting. So that's that one there. And yeah, we might sort of finish the formal part of the webinar there. But again, we've got dozens of questions that still remain to be answered. And so what we might do is spend the next 15 minutes. We've got to 1:30. We planned on a 90-minute webinar. So we've got the next 15 minutes to go through some Q&A. And so what we might do, Riz, if you wanted to sort of pick a couple at the moment, just to go through, and we might do a question each.
Yeah, absolutely. There's a few good questions here. There was one from, that Ray? Oh, sorry, I apologize. I've just scrolled through all the questions. There's so many. But there was a question about, what if I am a sole trader and I don't have any employees? How do I report ongoing? I don't have a payroll. I don't have STP. It is likely that you just have to report through the business portal, and that will be released on the 4th of May. So you have to enter the tax file number, date of birth, and the eligible person that's receiving that payment. Like I said, if you don't have a payroll software to take care of this, the business portal will be there will be a section where you can report it. But if you don't like using online stuff, or you prefer calling people, you can also call them. But I would try the business portal first. So it's imperative that you, if you don't have the assistance of a tax agent, get a business portal. It's a good time. And also it's just great to have it because you can see everything that's happening in your business from an ATO perspective as well. Really great question. Yeah, do you want to go one by one, Ben?
Actually, if you can do the next one, what I'm doing is actually posting this Q&A session live to Facebook.
Okay.
If you can just put that to
Lee, thank you for your question, Lee. I just clarify. Can you please clarify? Oh, that moved. Sorry. Can you please clarify the employee versus business participant? I do collect a wage and exclude myself as an employee. Sorry, as an employee, and edit myself as the business participant. Is that correct? Incorrect. Well, so just to answer your question there, it's an employee, you have to be on your payroll. That's just it. And it applies to the same eligibility criteria as any other employees. You have to be on the payroll before the 1st of March. If you're a casual, all the same employee eligibility. Now, as a business participant, that's not necessarily the eligibility criteria, but rather you run the business, you're actively in the business, doing things for the business, and you're either a partner, a director, shareholder, or beneficiary of a trust, or a sole trader, just yourself, and the business at an ABN before the 12th March. Now, that's the important bit, is the distinction between employee and business participant. Again, just saying it again, you can't claim for both. It's only one or the other. If you are already on the payroll and you're already paying yourself a wage, you got to keep paying yourself that $1,500 per fortnight minimum to be eligible for reimbursement. If you're a business participant, not necessarily.
Awesome. Great. Now I've got a question from Heather. Heather's asked, when can JobKeeper payments start if a business is not eligible until a projected May drop of 30%? Riz, you might have to just confirm this with me, but what I saw in that form is that you only have to anticipate a drop in revenue, and it can be a future month. So my understanding is that that's what you say. You say May will be the month where your revenue will drop by more than 30%, and that ticks your eligibility box. Is that?
Yeah, that's right. So you in that form, you'll be able to select which month you're going to expect the downturn. It starts from March all the way to September. So it's actually the future. So you can select May right now and then input that. And essentially what you're doing is you're enrolling early. Does that make sense? So you're enrolling early, but you're enrolling for the fortnights in May. Does that make sense? So it's not, it would depend when you're going to experience a downturn is when you're going to be eligible. So the eligibility is when you experience a downturn or you're projecting to experience a downturn. Not just because I project a downturn in June, I'm going to be eligible, I start receiving JobKeeper payments now. Because exactly that, my projection is saying June is when I'm going to be in trouble and I need the payments in June. Does that make sense?
Yes, sorry mate, it should do. I'm just grabbing the next question here. So Jan has asked, how about you are paid director's fees, or just moved, instead of wages? Will you be considered as an employee or a business participant? Now, this is a bit of a tricky one, Jan. Now, when you say director's fees, they are technically a form of wages. I think the distinguishing factor here is, are you actually on your employee's payroll system? Like, are you paying yourself through, you call it director's fees through the payroll? If so, I would expect that to be registered as an employee. But if you're not on your payroll system and you're sort of paying yourself lump sum director fees, then that's where I would expect you to be eligible as a business participant.
Exactly. Great question. Cam Hogan has a question here. Can you please provide us the drop date regarding applying for March and April? Great question. So from an application perspective, for March, again, there's 2 fortnights, like I said, the fortnight to the 12th of April and the fortnight to the fortnight to the 12th of April and fortnight 26th of April. That was a bit of March and most of April. Now, when you should enroll is definitely by the end of April for that. And you have to make the payments before. So there's no drop dead date yet for the first month. It's just because they are a little bit lenient on when you need to apply, but I wouldn't wait. If you're eligible, go today. That's when we should do it, and start paying your employees the JobKeeper payments.
Yeah, awesome. Now, I've got a question from Liz Peacock. Liz says, some accountants are advising us to add directors on the payroll. This sounds like after the fact. So are we wise to get their instructions in writing? Now, Liz, you're welcome to do whatever you like there, but here's what I'm going to suggest that you may want to do. And to do that, I'm going to show you an email that I received from the Tax Practitioners Board. So this was sent to all tax agents. And it's regarding the response to COVID-19. So I just want to pull up a couple of sections. Some advisors may be grappling with the tax consequences associated with the stimulus payment and wondering what will attract our attention. We also know that some businesses are already making changes to their business structures and employment arrangement following the stimulus announcements. We ask that tax agents and businesses be mindful that this is not acceptable to backdate or artificially change a business structure or employment arrangements, including changing the characteristics of payments in order to obtain a benefit or payment that would otherwise not have been paid. The Tax Practitioners Board and the ATO will take firm and swift action should this be the case. Now, that cannot be more black and white, that if you go and change things in retrospect, in terms of your employment status on the payroll, you go and change from trusts to companies or take your drawings as salaries. It is so black and white that they're basically firing a shot across the bow that they're going to come after you. Now, the information, like how this information is reported, would be very simple for the ATO to know who's done the wrong thing or not. It's by simply looking at the differences in pay run this year versus last year. It is so simple to work that out. So please do not do it. You can do what you like. If the accountant's saying you can do it, that's their own tax agent registration at risk. But we are definitely not going to be doing that for our clients or anyone who asks us to. And we are advising that that's a strong no, because it just cannot be more black and white than what we've got sitting in that email there.
Cool. Yeah. Really important distinction as well there, in terms of what's allowed and not allowed, and I think they're very vocal about that. Again, the federal government's forking out quite a lot of money on this, and I think they're going to take it quite seriously. And where, if there is a downturn that you're experiencing, I'm looking at the high level version of this, and you are experiencing issues, but you're really not sure what can you receive in the JobKeeper payment, talk to an accountant, and talk to an accountant who who has read everything and has been across everything. Just because we don't want to be, you're liable for that as well, and you don't want to be caught in the crosshairs of the ATO if there's any issues or anything like that, because you risk losing all of that. And now remembering, if you're asking the questions, if the business is already in dire needs, we don't need the ATO chasing us as well. That's just another stress we don't need. Maybe there's other ways. If there is no other way, other stimulus package or payments from the federal government, maybe there's other ways that we can help you from a cash flow forecasting perspective, or helping you out in managing the ATO and managing your expenses to make sure that you can keep the doors open. So yeah, there's more than one way to keep it going. I wouldn't risk it. If we're very clearly not allowed to do that.
It's just so black and white. There's no shade of grey in that. That's just, don't do it or else. Yeah.
Yeah, and I guess, yeah, there's a few more questions sitting out here, but we might keep answering them as we go along.
Yep.
Now, I do want to show a little bit more of a practical version of this. One of our clients, Will, thanks for the question, Will. Can an employee be eligible later down the track? That's absolutely right. Or a business participant in that case can be eligible down the track. Now, in your situation, I believe your wife is on maternity leave, and what if she, finishes a maternity leave very shortly, and then she still doesn't have income from her business? And the answer is go enroll at that moment. Because then you'll be eligible at that point in time. I wouldn't enroll now because you won't be eligible. But once she stopped receiving that maternity leave, definitely go for it. And something I do want to show as well. I don't think it was clear enough when we ran through, but I'm just going to share my screen really quickly here.
Yep.
Now, with the enrollment form, again, it's a fairly straightforward question. It's about a self-assessment. I'm going to go take my time a little bit more so people can understand the process. Are you an entity that is registered with the ACNC? Are you a charity? No, if you're not. Does your turnover exceed 1 billion? No. Now, this is the section where they ask you about your turnover. Has your turnover for the entity fallen or is likely to fall 30% or more? Yes. They're not asking for, years of documents to prove it, hundreds of Excel files. It's a yes or no question. Where we have to be reasonable is how we project it, of course. So the calculator that we send out is going to help you have at least a starting point for your reasonable projections. And also, here's the part that I want to show you as well. You see how it says March? That's because we're in March and April. Well, it started in March and we're in April now. There's no going back beyond that, but you can project going forward as well. But as you can see, the employee sections start disappearing here. Because what you need to explain is you have had to pay your employees the $1,500 in those periods. So only March and April right now has an employee section. They're the ones who are eligible. Now, if you go to May, it starts disappearing because there's no way that you could have paid them in May. Does that make sense? You have to wait till May happens and then enroll at that moment. So yeah, if you're not eligible now, but you're going to project eligibility in the future, at least start as a business participant first. You can do that. As a business participant, you're eligible in May, and then you can go and put in May. And then when it comes to reporting it in May, you'll start saying, all right, cool, I have employees that are eligible now because my business is eligible, and you start filling this form out again. Through another form in which they will release on the 4th of May on how we're going to report it ongoing. So yeah, it's a bit of a ongoing process because yes, a lot of people are eligible now, but some people won't be in the future. So we have to keep checking in to see whether we're eligible. Yeah.
Wonderful. Well, we might actually have to wrap it up now, Riz. And thank you, Jamie, as well for joining us as a presenter today. And yeah, as I mentioned, if anyone wants additional help, we are available for, call it emergency assistance meeting. If you want accounting, legal and HR help as a package, we've also got that at businessreliefpackage.com. And we'll also be sending some ways that we can help you as a client or not as a client yet with the JobKeeper assistance package that we'll be putting together as well to help you through the actual application process and getting that Xero stuff sorted as well, setting up all the pay items and that sort of thing. So that is it from us today. Thank you for giving up some time on a Monday around lunchtime. Thanks for having us.
Guys, and I hope everyone stays safe. Thanks, Ben. Thanks, Jamie, and the team for answering some questions in the background as well. Ange and Rose as well. Thanks for all your help, and everyone who joined in. Thank you so much. And if you think of anyone who needs that help, even just sharing that webinar to them, I really hope this provides some sort of clarity in this world that we're in right now, where everything is uncertain. So I do hope that helps. And yeah, we'll catch you at the next webinar that we have.
Wonderful. Thanks, Riz. Thanks, Jamie. And thanks, everyone, for joining.
Thank you.
Cheers. Bye.